Somebody gonna join in about 4 minutes. I know Cindy gonna join.
Okay.
Hold on, I'm trying to pull it up on. Let me see what it looks like on YouTube. All right, there we go. Alex said, "Look like you ain't shaved. You just got out of jail."
Looks like I got. Wait, what?
That's what Anna said.
She said it looks like I got out of jail.
Hmm. Did you open the live chat?
No, where's that at? Hold on.
I don't know where the chat.
Yeah, I don't know.
Oh, 1 second.
Oh wait, hold on. Oh yeah. If you, well, I don't know how it looks on the desktop, but you can
Oh,
chat, live chat.
all right, 1 second.
Hmm.
Where?
On the phone on the bottom left.
Oh, there, right there. Oh, okay. All right, got it.
Okay. I think there's two people, but I don't know who's in.
No, we just start. We just start at 12. Yeah, just wait and see
Okay.
who's doing. Mm-mm. All right, let's pop it off.
All right. All right. So today's topic, Kirby, you had brought it up. Kirby, you brought up today taking risk, the Department of Government Efficiency, and what was the last one you brought up? Was today's housing market. You want to start it off, or you want me to just wing it,
No, we can start it off.
or we just open up for questions?
No, we can start it off. It's funny. I see the comment that came on there. The dude to the left. I hope they're talking about you. But but yeah, no. So first off, taking risks. Let's start with taking risks first. The thing about taking risks is
No,
Alex,
leave it up. Leave it
you keep reading those comments. You're gonna lose your mind. All right, so anyway, but yeah, so taking risks is a major part of it. I mean, of course, people today they look at the aspect of risk as it's a bad thing. Like, oh, it's just too risky. This too risky. But sitting there being poor is too risky also. I mean, just looking at the inflation matrix and things like that that's going on. I mean, the prices that we pay today, 10, 15 years from now, will not even be applicable for people to even think about paying. I mean, I remember back in the, you know, 80s, 90s, where rent was, $500, $600 a month. I mean, now look at us now. A one bedroom here in Florida costs $1,400. But people have this notion that, oh, I could just work, 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 and then everything else, and then not do anything outside of work, and I will be taken care of in my golden years. That's not reality. In reality, it is, hey, if I don't do something on top of my job, if I don't add a side hustle, if I'm not putting my money or deploying my capital somewhere else to make more money to take care of myself, Social Security is not going to do it. 401k by itself is not going to do it. The pension plan, for the most part, in America is going the way of the Dodo bird. So people have to take risks to ensure that their survivability. I mean, people don't have to look far to see if they don't take risks, what's going to happen. Look at the brother, sister, mom, uncle that's sitting on their kid's couch, sleeping on their kid's couch because they can't afford to do their thing. Do or live more prosperous than they hope. Now the job's gone, they got older in age, they got replaced by somebody younger, and then now they have no money coming in, or they have that $1,200 Social Security check coming in. $1,200, you can't even afford rent. So
Yeah.
now just imagine 20 years from now what those Social Security checks will look like and how much more you won't be able to afford. So risk is a paramount thing that needs to happen.
Yeah. And that's kind of where I was gonna go off with risk too, Kirby, when you had brought it up. Like, I think, and it goes to what Robert Kiyosaki talks about, like in Rich Dad Poor Dad. If anyone's read that book, the riskiest thing you could do is depend on a 9 to 5 job, because you can't really count on any job to give you true stability in life. Because at any moment they can let you go. But if you take your job's paychecks and you create your own stability, you create your own portfolio of investments that can cover your liabilities, then you can create your own independence. I think that's the biggest thing. Is it's not so much of taking risk, like taking risk in buying a certain stock, or taking risk buying a certain property or a business. It's the biggest risk is depending on someone else to provide for you and your family. You've got to be the ones that can be in control of that. And that's where I think people don't understand the cause of fear or panic comes from not being in control. But if you are in control because you've taken the steps to make sacrifices and set up your family with a portfolio of investments that can provide, and you're in control, at that point, sure, you might have certain risks as far as vacancies or stocks going down and stuff, but it's up to you to do the homework and do your due diligence on maintaining those assets and being a good operator of those assets.
Yeah, that's the thing that people, I think that they don't grasp the concept of is being a good operator. Being a good operator is key to everything that you do. It's not just a set it and forget it mantra. Uh, I know when I talk sometimes I'm guilty of this. I make it seem easier than it actually is, and I make it seem easier than it actually is just because I've been through so many repetitions of doing it over and over and over again. But the true reality of it is it's not as easy. It's actually doing it. Like me, I always talk about setting up processes in place to make sure you know things are done. But the true reality of it is I understand that I can't depend on a pension from a W-2. I can't depend on the Social Security system if it's there or not when I reach that 65 age. I mean, Alex, of course, you were way younger, so if Social Security there by the time you hit 65, I made it, right? But
Yeah.
I can't sit there and depend on that and think that that is the end all be all. I mean, no matter how much debt I pay off, how many houses I pay off, or whatever, the cost of everything that we know today will be X number higher in the future, 20, 30 years from now. So let's just use a 1X. Let's just use, hey, everything, the price today will be double, 20, 30 years from now. People's income, if they don't I mean, just working at a job, if they stay in the same job, same position, their income is not going to double in 20, 30 years from now. So if they don't put another avenue, another stream of income into their life to cover the shortfall that the job has, because eventually they're gonna have to stop, then they're stuck altogether.
Yeah, absolutely. Hey guys, I mean, if you guys want to comment, have any questions, we're just talking. Don't feel afraid to just interrupt us. Um, on Doge, Kirby, I don't know what exactly you wanted to. I mean, I had some articles and stuff that I was looking at, but there's a whole bunch on what they're doing and things
All
of
right, go
that.
ahead. What we got?
I mean, I think the most recent one is like the federal jobs that they're cutting and the panic that's stirring up in like DC area, and especially like I was watching a video that came out from One Reno at a Time, and they were talking about how if you want to like nuke a housing market, this is the perfect way to do it because you're creating an influx of like inventory in the market, which is causing a lot of supply in the market, but there's not enough demand because there's no jobs. So what that will do to the market is essentially destroying it. But that's the most recent one. I mean, there's a lot of federal funding or federal expenses that they're cutting. Um, but what are you seeing on Doge? Do you support what they're doing? Do you disagree with certain things?
So when the article came out about the Washington D.C. market, I believe that's the one you're speaking about. About the Washington D.C. market, it's you're seeing a lot of houses go for sale. I took the article and I put it in the Discord, and I asked the people in the Discord, what do you see? What do you see from an investor's perspective? Of course, I knew people was going to look at it and they were like, "Oh, that sucks. People losing their jobs." Well, we looking at it as investors. We're not looking at it as human beings. Um, and then so the thing is okay. So now these people are losing their jobs for one or two reasons. I mean, it's because they're losing their jobs, they got to put their house up on the market, or they have to put, or they're remote workers and they got to go somewhere else, and they're putting their houses up on the market. The thing is if you look at it as an investor, if this is the beginning, it's starting in the government sector where people are losing their jobs, or people have to that's remote have to come back to the office. What do you think is going to happen in the private or public sector when these commercial companies, i.e., the Coca Colas, the J.P. Morgans, the Comerica banks, and things like that, make all these other employees come back to work? This is two or three things that I've seen. Most people, the savings that they save from working from home, from going to the job every day, paying for lunch and things like that, they didn't sit there and save that money. I mean, I know a lot of people who work from home that cancel childcare because they say, "Well, I'm at home already, so why pay the extra $1,200, $1,300, $1,500, some places even $2,000 a month for childcare?" So they cancel the childcare because they're at home with the child. So instead of saving that money to, hey, maybe this situation may change one day, they created other bills. They bought bigger cars, they bought bigger houses. They didn't save that money to set aside in case this environment changed. They can't afford to go back to work because now they can't afford that $2,000 a month, $1,500 a month for childcare. So as an investor, you look at that, and then so I would start looking at where's the most concentration of work from home people. If they have to start going back to work, it's going to be a lot more houses showing up. I believe the DC situation, that's just a precursor to what's going on. So when it start hitting all the other sectors, it's going to be a lot more inventory on the market for, I.e., especially when the interest rates are at a higher level according to historical norms for in the last 40 years. That will give opportunities to investors to take advantage of those situations. So and then I could get back to the dose thing, but we're talking about the housing market right now. So what's your thoughts on the housing market with that?
I mean, the housing market in general, like, yeah, there's things going on in the market, but like, just as an investor, I think, and I've said it before. I think buying as a home buyer is way different than buying as an investor. So if you're in the market to look for a home, yeah, maybe the condition of the housing market currently is as maybe not as like attractive, because you're looking at high interest rates, and most home buyers are putting down like 3.5, 5%, and or VA loans, and the cost of taking on a loan of that size, especially with prices the way that they are, you're going to be paying like $2,000 to $3,000 a month for like an average home. So I think as a home buyer, the housing market is, yeah, it's rough unless you're putting a large down payment down, 20% or more, to cut off PMI fees and have more equity in the home. But as an investor, I think any time is a good time to buy in the market, because regardless of the interest rate, and especially like the triplex, for instance, that I'm closing on 2 weeks from now, the interest rate is like 8.125%. And for most people, they'd be like, that's too crazy, that's too much. But it still cash flows at 13% cash on cash return. So buying as an investor, there's always opportunities. You just have to know how to manipulate the deal. I was gonna say manipulate the seller. It's kind of the same thing, but you have to know exactly how to sell it to the selling agent. Convincing them that, hey, the price that they want is not the price that it's actually going to sell for in a market like this. Negotiate with them and get the price lower, and that's the benefit of having high interest rates, because you can get the price lower. Sure, you have a high interest rate for now, but then you can refinance in the future. And if you can bring an 8% down to a 5%, then you're saving a lot of money, and your cash flow is only going to go up more from there. And by that point, you've already raised rent, so now you're just cash flowing way more. So,
Right.
as an investor, I think regardless of how it is today in the future, however, there's always opportunity for investors. You just have to continue to run numbers on those properties, know the areas you're investing in, and just, if the numbers work, then the numbers work. That's the only thing that's going to make or break a deal on investing in real estate. But for home buyers, I think it's a totally different market.
Right. Yeah. And I believe I talked to you when I was in Georgia last week, and I sit down with a commercial broker, and he talked about. And before I get into this, for anybody, just please ask the questions in the comment section. We'll get to those, but we're just gonna keep talking until we get questions there to hit on those. Um, but Alex, like I was saying, when I was in Georgia last weekend, and I was talking to a commercial broker, and he worked both sides. He worked the residential side and he worked the commercial side. And he said he loved working the commercial side because it all comes down to numbers. He said the real estate, the residential side, it's so much emotion. He said he used to be on the buy side when it comes to residential real estate, and then he would tell the he would tell his clients as buyers, hey, the property's not worth this much, but the buyers will want it because it has a nook or a special feature that it don't have, and they're willing to pay 60, $70,000 over the price. Of course, the bank, if they meet all the financial requirements, the the appraiser is going to make sure it meets the numbers that the bank need. But he said that was one of the things. He said, of course, the transaction on the commercial side is smaller, but net on price. He was like, so he was just giving an example. He said on the residential side, I would do like 100 deals a year, and then he said on the commercial side, I maybe do 25 to 30 deals a year. He said so the transactions are smaller as far as number wise, but the money that I bring home is about the same, or maybe even more on the commercial side because the deals are bigger. But on the commercial side, the emotions are totally gone from the equation. He was like, he can't, and he said this, I can't count on my hand how many people got screwed over on the residential side because the emotions took over took over the deal. He said even sellers. He like sellers. Their mom probably passed away in the house, or their mom used to, or the kids grew up in the house, or that's where they had their first dog. So they're valuing their life experiences on what the house is worth, and not the practicality of it. And then so he's seen that, and but that's when you're saying that it's it's all about manipulating deal. And I know people will say, well, he just bought a house at 8.8% interest, but the fact that Alex failed to mention that he also got $100,000 off the price of the house. Alex, I know you can be shy about it, but I won't be shy about it. But he also got $100,000 off the price of the house. So if he got $100,000 off the price of the house and he's paying 8% now, interest rates drop to 6 or 5 or 4, then he refi that, and then people need to understand it cash flows at the 8% interest. So every percentage point or basis point he gets below 8 is just more money in his pocket. So that's the real hallmark of it. So when you Alex, when you say anytime is a good time for real estate for investors, it's true long as you know the numbers. Long as you know the numbers, and when the numbers work, then you do the deal. It only gets better from you from there. It don't get worse. It just gets better from you if you run the numbers correctly. And that goes into having a conversation with the real estate agent, having a conversation with the seller and saying, hey, as a buyer, I need this deal to work for me. I understand you want it to work for you, but I can't buy it if it don't work for me. But having those conversations are key and paramount to what's going on.
And I think even for like home buyers or homeowners that want to buy a home, sure, there might be some harder points in the market now with higher interest rates and higher housing prices, and maybe certain areas with that are getting affected. But if you are buying a home, even just for yourself, if you go into the deal the same way you would as an investor, I think at that point you can still find a great deal on buying a home. If you go into the deal negotiating the price, getting the price lower, and still having it in your mind that sure you're going to pay a higher rate and you're not going to pay 8%. That was just I'm paying 8% because it's a DSCR loan as an investor. If you're buying, you're probably getting an FHA or a conventional, and you're probably going to get what about a 6.87% as a homeowner,
Right.
and but you can still refinance in the future, so that's also an option. But if you're a homeowner and you're going to see a house listed at 350 and you're going to offer 360 and 3.5% down, you're going to screw yourself. But if you negotiate and you get the house price down to 300, and then you put down 20% or 10 to 20%, I think at something doing it that way is going to be more beneficial to you as a homeowner than most homeowners that are only looking to put down the minimum. And of course they're going to say that the market's bad, because if you put down the minimum, you're going to pay so much out of pocket with the interest rates that we're seeing now.
Right, and it's crazy because of course I talked to that broker last weekend, but I also was at a funeral last weekend, and then I'm sitting there before the funeral starts, and I'm sitting there in the room with just with family members or what have you, and the guy sat down and talked to me, and then he was talking about real estate, and then I told him, I said, this is the best time to buy, and of course he's looking for residential for so he can own or occupy the property. And then he was like, "This is the best time. Only thing I saw on the news was this is a bad time." And I said, "Exactly." So if there's no demand for real estate right now, that means you're negotiating with yourself. Literally, if there's no demand, it's not like COVID times where a property for 200,000, somebody gonna offer 210, somebody gonna offer 230, and you gotta go higher than everybody else to get a property. There's nobody there. So the list price that you see is not reality. You should be going lower and lower and lower. And then once you get that property at a lower price, then, and I always say, you marry the house, you date the rate. Now, how long will I know? How long will this interest rate be this high? I don't know. But if you can get the price down to where the interest rate fits within your budget, then you have the ability to carry that note, and then when the interest rates drop, you just refi to drop the interest rates. You don't refi to take money out and do all this other craziness. You just
Right.
refi to drop the interest rate so your payments are lower. And then so he was sitting there, he was confused, but then he said that made all sense in the world. Like when he was like, yeah, they said that 75% of the home buyers said that they're leaving the market because they can't the interest rates are too high. I said, that's perfect. That means you just lost 75% of your competition. And people don't look at it that way. They think, oh, follow the crowd and don't look no more because nobody else is looking. No, this is the perfect time. I mean, like I just said with your deal. Somebody else on here, Cindy and Berto is on here right now. They got a deal, I think 20% off of what the list price was in this high interest rate environment. This is the perfect time to look as a buyer for owner occ or as a buyer for investors. This is the perfect time to be looking for properties. This is not a this is not a time to sit on your hands and sit on the sidelines because the news media telling you to leave it alone. Because one thing for sure, two things for certain, when that interest rate dropped to 6%, when that interest rate dropped to 4%, 5%, the prices of those houses will be way higher and it will be more demand drummed up. And then now you're competing against everybody else to get a home. You're not competing with nobody now. So you can write your own deals the way you want.
So, Curry, I actually have a question. Since you wanted to bring up DOGE, the Department of Government Efficiency,
Yep.
um, so I mean, it's not guaranteed, but it has been announced or talked about. They want to give back $5,000 to up to $5,000 for American households. Now, just in the aspect of saying there's 130 million households in the U.S. roughly, and sure, it says up to 5,000, but let's just say 5,000 for each household. This is going to be like 6 to 700 billion dollars given out to the public.
Mm-hmm.
You think we'll see another inflationary event?
100% will be another inflationary event. 100%. And the reason why, and it's sad, but the reason why is because what did your mom and grandma say back in the day? Money just burning a hole in your pocket. That's why people are gonna get the majority of the people. I know it's gonna be somebody out here. No, not me, not me. I'm not gonna do that. But majority of the people are going to spend the money. I mean, I remember talking to when COVID was going on, and then Trump put out the first stimulus check. Everybody was locked down in the house, but they got that first stimulus check, and then the first thing that people did was they thought about buying rims for their car. So I'm talking to a business owner in Michigan, and he said, and the business has been going on for about 15 years at the time. And he said, this is the most money we made this quarter than we made in any other year prior. So you telling me you're locked down, can't go nowhere, you get money, and the first thing you think of is putting rims on your car? And then what was that? That check was what, 15, $1,800? I can't remember what the
16,
check was.
yeah, 1,600.
Yeah, and then so now we're talking 5,000. So what that's really doing is putting $700 billion back into the economy, and it's gonna be $700 billion of people going to buy extra stuff that they couldn't afford on a regular basis. It's gonna be people that's taking the $5,000 and say, "Oh, well, now I could put a down payment on a car," and they're going buying cars that they can't afford. All the stuff that we seen during COVID is just gonna be double. And so it will be inflationary event, but then the prices are going to go up, and then the money's going to be gone, and then people are going to go back to the normal check that they have, and they can't afford the prices that they raised it to. And so, am I a fan of Doge giving money back to the taxpayers? No, but I don't think the government could do anything else better with it. Unless they saying we're going to use this money to pay off the debt that we already have, there's no other place to put it. Because of course I don't trust the government to hold the money because they're going to do something stupid with it, just like the American people doing it. But the American people actually paid the taxes, so give them the money back. But I don't think it's going to be good for the economy all around. I really don't.
Yeah, I agree. I agree. I think this will just, like you said, it will be similar to what we saw during COVID. Um, Now, I mean, just like an unbiased opinion on Doge, do you think anything they're doing? Do you have? What are your pros and cons on? I guess what Doge is doing.
Well, of course, people who know me outside of this channel, they'll believe that it's a biased opinion. But the truth is, I am a fiscal conservative, meaning that I only care about the money. I don't give a damn who is in office. I mean, I run my household. I say I run my household like I'm in charge. My wife runs my household just like that. I care where the money's going. We care where the money's going. And then so do I want just a bloated workforce that's doing nothing? I mean, just think about it. Let's just use the IRS for instance. We as taxpayers pay the IRS to audit what we're doing. That's like saying, hey, we pay the police to make sure that we ain't doing no crime. I mean, I don't get it. If you gonna add all of these extra people to do it, go after the people that need to be going after. Not the mom and pop person, making 60, $70,000 a year. I mean, going to the fact that for let's say Cash App and Zelle and well, I don't know what other these money transfer places. And then they said they tackling money laundering. Money laundering at $600 a year, that's not money laundering. That's me letting my cousin borrow some money. But you want to tax that. That's what I'm saying. So I looked at it as more the people that they brought in or the policies that was brought in before was just, hey, let's go just go after the people that is already not making any money. If you want to go after the rich who's money laundering, go after them. But don't disguise it and then talk about some $600 on Cash App. Now we got to audit what the hell you doing, or you got to pay taxes on that money. It just don't make sense to me whatsoever. But as far as Doge go, and I think we got a question there, so I'll get to that in a second. But as far as Doge go, I appreciate somebody looking after the money, but then you got to add in the fact that okay, if you're going to save money and talk about the government making frivolous spending, you got to point out frivolous spending by the administration that's in. I mean, no president ever said at a Super Bowl, but to pay $12 million for the president to see it pay a Super Bowl, it's still frivolous spending. I know when it comes to the total budget, it don't even it's not even a routing error on the balance sheet. But still, if you want to talk about financial responsibility, be financially responsible all the time. So that's really how I look at it. So I mean, people could look at it as, hey, I support Trump or whatever, but I'm willing to call the BS when I see the BS. All right.
Very
So
true.
Berto asks, what's the best way to find an experienced real estate and investment trust attorney? It seems the most are focused on simple trust and don't focus on tax optimization and perpetual wealth building. Alex, that's you right there. You going through it right now. Let me know if you
uh,
need me to ask that again.
no, yeah, Berto. I think I sent you a video in the Discord on Anderson Business Advisors explaining something to do with this. But that company, Anderson Business Advisors, that's the one that Kirby and I use. They seem to be extremely knowledgeable in setting up things like this, and especially because yes, they are lawyers, they are attorneys, but they are also investors. So they understand what it is that you're looking for as an investor and how to maximize, the taxes or taxes that you'll have to that you're trying to pay less on,
Yeah.
or maximize your investments. Now, I mean, there are some things that, again, like Kirby has said, remember they are lawyers before investors, but they will try to recommend certain structures that may not be as um, profitable to you, but you just have to be the one to know how you want it structured and tell them what it is that you want laid out. But they will explain everything and they'll walk you through it. And again, they are very knowledgeable, and you'll have full access to them. It does cost a bit. I think Kirby and I each paid somewhere around like $20,000 in total um, to have everything structured. But I would have to say it is definitely worth it. If you want complete anonymity, asset protection, access to having your questions answered by lawyers just about 24/7, um, and creating LLCs. They process all of your paperwork, your annual filings, your meeting minutes, all that stuff that you don't want to have to worry about as an investor. They will set it up for you, and you kind of become like a member of their program, and I think it's valuable. But the name
Yeah,
of them is Anderson Business Advisors.
yeah, and that's not a paid plug by Anderson to point that out. And I like Alex said, that's the people that we use. When you talk about the $20,000, that goes into setting up a whole crazy structure. But when it comes to just the trust itself, it's about 1800 to $2,000 to set up the trust. But they'll walk you through the whole process, and then you could just leg on as it goes. When me personally, when I got into Anderson and started doing that, and then that's why the number is so high. I think I had already had 15 rental properties. Um, and I already had stuff set up and things like that that I needed to be taken care of. So that's why I just bought the whole like titanium. They got titanium, silver, gold packages and stuff like that. I just took the top tier of what they had to work with it. But just the trust itself, building that and just starting there because that's the genesis of it. The trust. It's about 18 to $2,000 to do it with them. But like Alex said, that they are very knowledgeable about what you're trying to do, especially as an investor, especially with growing a situation and not just, hey, I'm sitting here with $5 million and then what do I need to do with the money? So they are very knowledgeable on that. So that's a good place to go.
Yeah, yeah, absolutely. And like Kirby said, they will structure everything. So I mean, like, though, if you want to go with the full package, like the titanium package, what it would do for you is basically they'll set up a living trust for you, and then under that living trust, they'll create you a holding company um, for your real estate, and then they'll create you another LLC separate from that for your stocks. Um, if you want to have one for your stocks as well. It like I said, it all depends on what you want, and you let them know, and they'll structure it as such for you. But then under that holding LLC is where it holds real estate in different LLCs. So very it structures everything to be very protected. If you ever have that fear of getting sued or anything of that sort.
Right. Alex, and to the next question you get here. So uh, an article just came out and it said that the stock market itself lost $938 billion yesterday with the downturn in the
Yeah.
market yesterday. So, what is your thoughts on the market having a big down day? I think we had two big down days this week or in the past 2 weeks. But what is your thoughts on the stock market having that big crater situation on Friday?
Yeah, I have to admit, Friday I was kind of busy with like talking to between the lenders and like the realtor for this triplex, so I didn't like pay too much attention to what was going on, especially since I can't be as active as I would like to be because I got to just sit on cash until closing. But from what I saw, it looked like there was a consumer sentiment report that came out that was not like as pleasable. So the market reacted to that, and then I saw on United Healthcare, um, I guess the Department of Justice is like opening up an investigation case on them for how they're billing clients. Now, I don't know if that directly affected the market itself, but I know it affected the Dow Jones. Um, but I think these are just times that will occur in the market. You're going to see impactful events like this where everything seems to be going good in the market, and then the news will come out, and news determines what direction the market is going to go in.
Yeah, I see right there in the comments, Jonathan Velasquez said, "Love it," and then he said, "Got to know what you own. Uh, if you believe in the work that you put in, it's an opportunity." And that right there is, I agree with that wholeheartedly.
Yeah.
I did put on some call positions on the big downturn. I love downturns. But I did put some call positions on there. Maybe we get a bump on Monday. Maybe not. Either way, I put the call positions way out further dated. So if we have more downturn, I can double down and I got time for those positions to work itself out. But in general, what Jonathan said, that's what I'm doing. I just see it as opportunity. I don't sit there and hoe and hum and complain like, oh, my money's going down, because the truth, you don't lose the money until you sell it.
Right.
Like it can go down another 15%, but if you just sit there and hold in there, or even if you got some courage, put more money in there to average down, then in the future it's going to be higher. And I'm an average down kind of guy. I mean, I love to see a market 10, 20% down, because the only thing I'm gonna do is I'm just gonna tell the family, hey, everything that we was doing, we're gonna stop because all that money is about to go into the market. That's all that happens for me. And I love downturns. People that's in the Discord channel, and for anybody that want to join the Discord channel, it's always in the comment section. But downturns is the thing that I look for. I mean, when the market's going up, I talk about what's going on, but when the market's going down, I'm the most excited. I post the most in the Discord when the market's going down, because it gives opportunity. The market's going to be irrational. So what it's going to do is some stocks are just going to overshoot to very undervalued. And then those are stocks that I'm looking for to, plow into. And I'm not looking for 20 stocks to plow into. I'm looking for the most undervalued stock based on fundamentals, based on what they're doing operating as a business, so I can put as much money in there as possible, so when this thing turn around, that I achieve maximum alpha, maximum capital from it once it happens. And then I just go do that over and over and over again. I'm not sitting there worried about it, because we always talk about, if you study history, if you don't study history, you're bound to repeat it. But if you look at the history of the stock market from the past 50 years, if you look at a chart, it shows it starts at the lower left and then it goes to the upper right. So these little blips that you see right now is only temporarily. So those are just opportunities. It's not death. It's just opportunities so you can take advantage of. Warren Buffett says it best: you buy when there's blood in the streets. When everybody else is doing something, you don't want to follow the crowd. You want to do the opposite. That correlates to the housing market also, is nobody wants to buy houses now because the interest rate too high. So this is the perfect time for you to buy a house, because you can get 10, 20, 30, 40, hell, in your case, $100,000 off. And even if you was living in one of the units in that triplex that you're about to buy, the tenant is going to pay for you to live there for free.
Right.
But these are the opportunities that's there, because once that interest rate drop in the housing market, then those opportunities gonna go for the normal mom and pop investor. I mean, for Alex, for you just gonna find another way to negotiate and make the numbers work to make it happen. But for the normal person that don't have an ideal, that's gonna be bad time for them. But the news media and everybody's telling you the inverse of, hey, oh yeah, you gotta wait because the interest rates are too high. They fail to mention that, oh, you can get a lower price also. So you can get the price low enough to, like if you was paying it at a 4% interest rate. But they don't say that, and then the investors take advantage of it. Then when the interest rates do drop, i.e., COVID drops substantially, then it's a bidding war from hell, and then people still can't get it. And then who they blame? They blame the investors, because the investors took advantage of it. No, the investors taking advantage of it when they can negotiate the price down, not when they can negotiate the interest rate down. So just so you understand and know what's going on.
Yeah, Jonathan said, when I first started investing, the downturns would hurt my stomach. Now I look at it like a store having a sale. Yeah,
That
that's how to look at it. Exactly.
Yeah, no, it's perfect. That's the perfect idea to look at it. Because I mean, if I gotta go pay retail price at the Gucci Louis store, and then I have a half off sale and I'm the only one in there, oh, it's prime time. But
Yeah.
that's the way. That's the perfect way to look at it, Jonathan. That's the absolute perfect way to look at it.
Exactly. Guys, if you have any more questions, let us know. Let's see, make sure we don't miss any.
Yeah. And then and then another one that just came out, the Berkshire Hathaway's annual letter just came out. Alex, as you know,
Mm-hmm.
uh, old Big Warren sitting there on about $330 billion worth of cash. What does that tell you as an investor? Him sitting on all that cash.
He's waiting for an opportunity.
So, do you think that means that he thinks that the market is about to have a big downturn, or do you think that he just waiting on something that to buy a company outright, and he just don't see the right price at the right time?
I would say he's waiting on, like before I was saying maybe he's waiting on a big downturn. And I mean it I'm sure it's a possibility for him. It's open up for him. But he's still been acquiring. Like he acquired Pilot Flying J recently. He's been buying into, like, I remember he bought into Ulta Beauty. He bought into, you had just mentioned, Occidental Petroleum. So he's
Mhm.
finding deals still. I don't think he's just sitting on cash and just like, oh, when it comes to me, it'll come. I think Berkshire Hathaway is still doing their due diligence, looking for good investments, but they're not just dumping money just sporadically or crazy, like dumping a ton of money into whatever investment they see in the market. They're very calculated with their approach.
Teran Horsey asks, any advice for a person struggling with looking at the downturn of the market?
It's looking at the downs.
I got something. I got something. Well, Alex, while you think of it, this is. I mean, to me, Friday was this a blip to me. Um, I don't even really think the downturn has happened. Alex, from the highs, I believe we like what 3% from the highs, 2% from the highs.
It was like 2%, right?
Yeah, we're like 2% from the highs. I mean, I'm downturn don't for me don't even compute till we're at least 10% down from the highs. I mean, this blip yesterday. I mean, maybe you're in a long position or something like that, and it sucks temporarily. But until this start hitting, once it eclipses the 5% down, then I'm like, okay, now let me get ready for the 10. But if it don't go past the 5%, I just think this is just a little sell off for some geopolitical or economic news that just came out that's just going to be a blip in the radar. Now, once we eclipse that 5%, closing below 5%, then I can start looking at 10% downturn. But like Jonathan said, it's just opportunity. It's opportunity right now just to keep doing the work, keep doing the due diligence, looking at the fundamentals, looking at the intrinsic values, looking at the discounted cash flow models to find out what businesses are undervalued, and you focus on one or two businesses and look at their balance sheets, read their previous transcripts from their conference call to see if they're still operating on a high level, and then don't listen to all the noise of Trump tariffs or hey what Doge doing or what somebody else doing or customer sentiment or unemployment rate. I wouldn't pay attention to none of that. I would just look at, all right, let me find the best company that's operating, and then I'm going to just store up a lot of cash. And then once we close below that 5% rate, okay, I'm just looking to take a stab at the 8%, 10% rate down of the market. When the market goes down 8 to 10%, individual stocks may be down 12, 15%. And then if you're in the SPY, I mean, if you're in the NASDAQ, if it's a NASDAQ stock, you might get 20, 25%. And then that's when you just want to look to drop a boatload in. Don't unload the whole, your whole load right there, because now you're looking for correction. Then you're looking for recession, not the recession, but 10% is correction, 20% is depression. Now you're looking for that 20, 15 to 20% mark to load up again. Like we always talk about building a position. I never build a position all at once. I will buy it, I'll buy 25%, hoping it'll go down. And then I will keep layering in as it goes down. Then hopefully drop the max amount of my money in at the lowest point that I can get. But once I've built out a full position and then I know that company is still operating, um, I know it's still undervalued or the market is just being irrational, I'm still loading up cash to I might double the size of my position just because of the opportunity. And then I would just put the money in there to make that happen like that. But it's just you have to be flexible and be able to work it. The market is not going to just go V shape up down and be like, oh, I missed my opportunity. You start preparing yourself now so you can have that money to put it in when those chances come.
Right. Kirby, give me like 2 minutes. I gotta get a charger. I'll be right back.
Okay, yep, no, it's all good. So while Alex gone, I could talk crap about him. But any other questions y'all got out there in the chat? I'm here to I'm here to answer everyone. You can speak now, forever hold your peace, or you can wait till next Saturday. But it's up to you. Alex over there with that iPhone 20, it only lasts like 3 minutes without a battery. So, any questions out there? Mm, 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 mm.
All right.
Yeah. So we're talking about your iPhone 20, and it only lasts like 3 minutes without a battery.
No, man.
Yeah.
Yeah, man. I've dropped it 200 times. That's why.
So, so Alex, let's talk about that deal that you did, that you in the process of doing. Right now, you're where you're at with it. You're you already contract signed and everything. You're just waiting for the closing date, correct?
Yeah. And we got a question. I don't know if you want to
Okay.
answer that first.
Okay. Go ahead. What's the
Sydney
question?
said, "What do you say to a young person who feels hopeless, working hard, overtime, can barely make it?"
The
Um,
first
hmm,
you want to answer first, Alex, and then I'll go second.
yeah, I mean, it kind of reminds me of when I first started. I mean, mind you, I mean this was before we saw crazy inflation, but I think the principle would stay the same. Um, I mean, I ended up moving out of home um, unplanned, and so I was kind of in that position. I was like 19 years old, and so I moved in and I roomed with people. So I think to a young person, I would tell them stop thinking that you deserve some kind of like luxury living. And I'm not saying all of them are necessarily living in luxury, but in the sense of learn to be more learn, learn to be more accepting of being, I would say, uncomfortable in the sense of like living with other people. Um, so I mean, because living with other people, I think can drastically cut your. Did I freeze? Am I frozen here?
Yeah, I think you are frozen. Uh,
Yeah, I
I,
just froze.
yeah, that's the iPhone 20. But all right, I got it, Alex. Uh, and I think we're aligned on this. And but my answer is gonna be a little bit harsher than Alex. So I believe Cindy. So please take all the bad words that I might say out of whatever you might recommend to this person. Um, I look at it as people got to put their damn pride to the side. All right, so if I'm making $20,000 a year, and then let's say Alex is making $20,000 a year, and we both barely can survive, and let's say I got the same family dynamic that I have now, and he has the same family dynamic that we have now. I can sit here and say, "Oh, I want to be independent all I want to," but the truth is we need to combine forces, i.e., combine forces, not combine bank accounts. Meaning, i.e., hey, let's go find a 2, 3 bedroom, maybe 4 bedroom apartment, and we split it, which it'll be less cost reducive on us, and then that gives us extra money, not extra money to go play in the streets and do all that other stuff, extra money to save up to go do something like we talk about, maybe a house hack or something. We save up the extra money, set it to the side, and then we may have to use both of our credit scores and our income to hey, go buy a fourplex, go buy a sixplex or something like that. It may be a sixplex or a fourplex that only got 2 bedrooms, but now both of our families could live in that fourplex. After we done saved up living together, we can go live in that fourplex in 2 of the units, and then the other two rents is paying that. That will give us the ability to save up again to rent and repeat and do it again as a team. I mean, I know it's hard to find people that's even thinking that savvy, but let's just use it on an individual level. First, find somebody that you can roommate with to save the money, and then you, especially with FHA, and then if you was military, VA, and stuff like that, you can put 3% down, and then you could go buy the fourplex yourself. You go live in the smallest unit, and then rent out the other units, and then your cost of living goes. So now all that money you get to keep in your pocket. You get to keep in your pocket to rent and repeat and do it again. Of course, you're still gonna have to go to work. Of course, you're still gonna have to save, and of course, yes, it's still gonna suck. But the suck is temporary. It's a temporary suck. And then maybe it might suck for 2 to 3 years. It's still temporary. And then you go from that fourplex and then rinse and repeat and do it again. Buy a duplex fourplex. You rinse and repeat and do it one or two more times, and then everybody else is paying for your forever home. But you're not sitting there depending on a man, depending on somebody else to hand you a paycheck. Go create your own. It's you working when you're an entrepreneur trying to do it yourself until you get the right processes, the right capital, the right everything in place, so you can take time off. Oh, my volume is out. Can you hear me now? All right, perfect. Sorry about that. Yeah, you got to create. All right, thanks, Cindy, for letting me know. Create your own paycheck. That was a perfect spot. Yeah, you got to create your own paycheck because, like I said, being an entrepreneur is is very time consuming. Everybody think, oh, I can be my own boss. So now instead of taking 30 days off, I can take 60 days off. True reality of it is that's not the truth. You working those days. I mean, there's many times that y'all can see me even on Discord or everybody's talking about vacation. My family goes on vacation, not me. I'm still sitting in front of a laptop. I'm still having conversations about things that's going on. Because one thing that's true, two things for certain, is the world is still going to go on. And when you're in control and you're the top, you're the lead of the business, you still got to be able to be accessible to your clients. You got to be accessible to your tenants. You got to be accessible to your employees. That's the reality of being an entrepreneur. Everybody just think it looks all good. And, you see the guy with his laptop on the beach. That's cool. But most of the time, he's not spending it with his family. He's spending it working. He just happened to be on the beach doing it. And you think it's fun, but it's not as fun as everybody make it. So if if you're not willing to go through that, then it's really uh I'm trying to use a PG-13 word. If you're not willing to go through that, then you just need to find up your skills and try to move up the corporate ladder because that's the reality of what's really going on. As I'm looking through the comments, it says you told him Alex story, and then you said quick comment to add to what you were saying. History says a downturn is inevitable. 9/11, housing market crash, COVID are just a few examples. Again, that just means an opportunity. And then I see sounds back. Yeah, I think Alex destroyed it with his high price ass iPhone. That's what probably messed it up on his side. But any other questions y'all got out there? I'm free as a bird, and I'm you know me. I'm here to the last person going. So ask question to Cindy. I hope I answered your question without offending anybody. Anything else out there? All right. Well, I guess I will wrap it up there. Alan's having technical difficulties. It's our first go at it. So again, chime in every Saturday, 12 p.m. Eastern. Come with the questions. I mean, that's what we're here for. Thanks for the people that joined in, and we'll see y'all next week. Thanks a lot, Jonathan. Y'all have a good one.